Okay, so you're thinking about retirement and how to make your money last as long as possible, right? But also maybe looking for ways to keep it growing even while you're not working.
Yeah, definitely a lot of folks are looking for that balance.
Exactly. And today we're doing a deep dive into one specific strategy from Midland National called the MNL IndexBuilder 10 Fixed Indexed Annuity.
Mhm.
We're going to try to break down how it works and what the potential benefits and downsides might be so you can see if it might fit into your own retirement plan.
Right, because everybody's situation is
With
different.
Absolutely. So we're pulling from a research paper put together by Diversified Insurance Brokers. We always try to get you the best information we can.
And I think this one covers a lot of interesting ground.
Yeah, it really does. So let's get into it. One of the things that jumped out right away was this potential bonus you can get just for starting an annuity with them.
Oh yeah, that's a pretty attractive feature.
It says you could get up to 14% added onto your initial premium.
Right off the bat.
So let's say you put in $100,000, could mean you're starting with $114,000. I mean, is that typical, or is this annuity kind of unique in that way?
I'd say it's definitely on the higher end when it comes to starting bonuses. You don't always see that kind of upfront boost.
Okay, so that's one point in its favor, but there's also this optional thing called the additional benefit rider.
The ABR.
Yeah.
What's that all about?
It's like an extra package of features you can add on, and one of the things it does is it can actually increase that initial bonus even more.
Really? So more than 14%?
Potentially, yeah, since with the ABR, you could be looking at up to a 17% bonus within the first 3 years.
Wow, so it's like getting an even bigger head start.
Exactly. And that's not all it does.
Yeah.
The ABR also gives you some other advantages, like a higher allowance for withdrawals each year without getting hit by a penalty.
So more flexibility if you need to access your money?
Oh, right. It could go up to 20% of your annuity value that you can take out each year penalty free.
Interesting. And there was something else too about getting your premium back. Oh yeah, that's the return of premium benefit. Basically, after the third anniversary of your contract, you're guaranteed to get at least your initial investment back, even if the market hasn't done so well.
Okay, so even if things go south, you're not losing what you put in.
Exactly. Minus any withdrawals you take in, of course.
Right, of
No.
course. And what about if you decide later on that you want to convert your savings into like a regular income stream?
You mean annuitizing the contract?
Yeah, that's the word.
Well, in some states, the ABR can also give you a little boost to those income payments, like a 4% increase.
Oh, wow. That's not bad at all, though. I guess it depends on what state you're in.
Yeah, it's not available everywhere, so you'd have to check the specifics for your location.
Okay, so all that sounds pretty good. But how does this annuity actually grow your money? I mean, it's linked to the market, but not directly invested, right?
That's right. It's not like buying stocks directly, where you're riding the ups and downs every day.
So how does it work?
Well, with the MNL Index Builder 10, you get to choose from a bunch of different index options to link your growth to. You've got the S&P 500, of course, that's a popular one.
Yeah, I've heard of that one.
But there are others too, like the Fidelity Multifactor Yield Index or the NASDAQ 100 Volatility Control, 12%.
Those are a mouthful.
Ah, yeah. Well, they're designed to track different parts of the market, so you can kind of pick and choose based on your risk tolerance and how you think things will perform.
So you're not putting all your eggs in one basket.
Exactly. Diversification is key.
Okay, so you pick your index or indices. What then? How do you actually get credited with the growth?
Well, there are a few different ways. Some of them track the index over a year or even 2 years and just compare the starting point to the
Right.
ending point, and that determines how much interest you get.
Makes sense, but I guess there are limits, right?
Yeah, usually there's either a cap, which is like a maximum amount of interest they'll credit you with, even if the index goes way up, or there might be a participation rate where you only get a percentage of the index's gains, say like 80% or something.
Okay, so you're not getting all of the upside, but you're also not exposed to all the downside.
Right, that's the trade-off.
And what about other ways to get credited?
Well, there are some strategies that track the index monthly instead of annually, and that can be good if you think the market is going to be choppy with lots of ups and downs.
Okay, so you capture more of those little movements.
Right, and there are even some enhanced strategies that aim for higher participation rates so you get a bigger chunk of the gains,
Hmm.
but those might have a small annual fee called a strategy charge.
Got it. So lots of different options to choose from depending on your outlook.
Exactly, it's about finding the right fit for your investment goals.
Now, one thing that always worries people about the market is the potential for big drops. I mean, nobody wants to see their retirement savings disappear overnight. What kind of protection does this annuity offer?
Yeah, that's a big one, and this is where the fixed part of fixed indexed annuities comes, in this particular annuity, has a 0% floor.
So no matter how bad the market gets, your account value can't go below zero.
Exactly. That's the safety net. It means your principal is protected from market losses.
Okay, that's reassuring. And there was something else mentioned about an accumulation value true up. Can you explain what that is?
Sure, it's a feature that kicks in during the surrender charge period, which is the time when you might have to pay a penalty if you withdraw money too early.
Right, I remember reading about that.
So this true-up thing, it basically provides some extra security if the strategy charges you've paid end up being more than the interest you've earned under certain conditions.
Okay, so it's like a way to make sure you're not losing out even if you have to pay some fees.
Yeah, it's an added layer of protection during that initial period.
Now, what if you do need to access your money for some reason, like an unexpected medical expense or something? What are the rules around withdrawals with this annuity?
Well, they've got some built-in flexibility. There are waivers that let you withdraw money penalty-free if you end up in a nursing home or if you're diagnosed with a terminal illness.
Okay, that makes sense. Those are pretty serious situations.
Right. And it's also designed to work with required minimum distributions, or RMDs, which you have to start taking from retirement accounts once you reach a certain age.
So you can use this annuity to satisfy those RMDs without penalty.
Exactly. And even for regular withdrawals, you're usually allowed to take out up to 10% of your annuity value each year without a penalty starting in the second year of the contract.
Not that bad.
And remember, with the ABR, that percentage could bump up to 20% as long as you didn't take a withdrawal the year before.
Yeah, that's right. So there are ways to get to your money if you need it.
Definitely.
And what about what happens to your money if you pass away?
Well, the annuity has beneficiary protection. So you designate someone to receive your money, and they'll get either the full value that's accumulated in the annuity or a minimum guaranteed amount, whichever is greater.
Okay, so your loved ones are taken care of.
Exactly. And that can also help avoid probate court, which can be a real hassle for your heirs.
So it can make things easier for everyone involved.
Yeah, that's the idea.
Okay, last but not least, who is Midland National, the company behind all this?
Midland National is part of Salmon's Financial Group, which has been around for a long time, and they have really good ratings from the major financial rating agencies.
So they're a solid company.
Yeah, those ratings basically indicate their financial strength and ability to pay out claims, so that's always a good sign.
Okay, so wrapping things up, it sounds like this MNL IndexBuilder 10 is offering a few key things for retirees.
Definitely.
You've got the potential to boost your savings right away with those bonuses, and then you've got a bunch of different ways to potentially grow your money linked to different parts of the market.
With varying levels of risk.
Right, and on top of that, you've got the security of knowing your principal is protected from market drops, and that there are ways to access your money if you need to.
Plus, your beneficiaries are covered if something happens to you.
Exactly, so it's like trying to find that sweet spot between growth potential and security.
Right, it's about managing those trade-offs that come with retirement planning.
Absolutely. Well, this has been super informative. Thanks for breaking it all down.
You're welcome.
And for everyone listening, I think the big question to ask yourself is, how might a fixed indexed annuity like this one fit into your overall retirement strategy?
Yeah, it's definitely worth considering.
It's all about figuring out what works best for your individual situation and goals. So do your research, weigh the pros and cons, and make the choice that feels right for you. Thanks for joining us on The Deep Dive.
See you next time.